This conference will now be recorded.
Okay, so as you remember, when we first started the course, we looked at the financial accounting theoretical framework. And what I indicated to you was that our primary objective in the course is to learn how to prepare an income statement, a statement of retained earnings, a balance sheet, which we will do all these today, and then finish up with a statement of cash flows. We'll do that when we get to the chapter on cash. But right now, we want to make sure that you're aware that at the midterm, you will need to be able to prepare an income statement, statement of retained earnings, and a balance sheet. So let's begin to look at how we're going to get to that point. This is a guide for how the financial statements will eventually look. We'll just do an abbreviated thing, but eventually you prepare, first of all, the income statement. The income statement lists the income for a particular year. So this is December 31st, 2015. This is the income that the company has. So after all of its transactions and everything, this is the income, and it has to pay taxes year by year. And so we do the income statement every year, then we file tax returns, pay our taxes. So this just shows from everything we've done that year what the net income is as you do personally. You prepare you list your income yearly, and so a company lists its income yearly, pays its taxes. And we have a couple other things, earnings per share on that statement. Then we have the statement of retained earnings. What the statement of retained earnings is going to do is say, given that you had, previous earnings and net income, what were the dividends paid, how much of the earnings have been retained in the business. So this statement always looks like this: beginning retained earnings plus net income or minus a loss if you had that, less dividends gives you the ending retained earnings. Finally, we have the balance sheet. And what the balance sheet does, it shows you, okay, these are the assets, liabilities, and stockholders' equity. Year one at the start of the period, year two at the end of the period. And so we will be on the next study problem, be looking at the beginning year one financials, then year two in terms of the balance sheet. Notice that we have current assets first, total current assets, then the fixed assets of long-term assets, then the total assets in general. Then we have the liabilities, current liabilities, long-term liabilities, total liabilities, the stockholders' equity, retained earnings, total equity, total liabilities and equity, and these have to agree. So total assets, based on that accounting equation, has to equal to total liabilities plus the stockholders' equity. So you're into some balancing with your trial balance. When we finish these statements, the balance sheet always has to be in balance. So this is that accounting equation: assets equal liabilities plus stockholders' equity plus common stock plus retained earnings. Retained earnings consist of the revenues minus expenses minus dividend. So we always are focused on this accounting equation. We make journal entries based on the fact of double entry accounting. Whenever we engage in a transaction, we receive something that's a debit, we give up something that's a credit. Debit's always on the left, credit's always on the right. Then we have the accounting cycle. And we finished the first 4 steps of the accounting cycle. We analyzed transactions, we made journal entries, we posted to the ledger, and we prepared a trial balance. So we had steps 1 through 4. We're going to skip 5 and 6 for now and go to 7 and 8, where we prepare the financial statements and close the accounts. We will come back to 5 and 6, probably after the midterm period. But rather than put these steps in, which has a tendency to be a little confusing as we're trying to finish 1 and 4, we'll skip those for now and we'll do 7 and 8, then we'll come back to 5 and 6 later. So we'll be up to steps 7 and 8, where we're preparing financial statements based on what we've done so far, and then we're closing the accounts. And so that is what we'll be doing today. And so you're going to see that we're very close to where we need. Any questions on anything I've said so far?
No.
Okay. Let's go back to our journal entry, ledger, and trial balance in class practice problem. And we're going to move back to this problem. And we're going to go through what we need to do in terms of preparing the financial statements and the closing entries. And next class period, I will say it now so we can get it straight. Each team will go back to what I just talked about, where you had to do the journal. We had the journal entry quiz, and you moved on to do the ledger and the trial balance. So each team will for me next time, they'll go back to that problem, and you're going to do the financial statements and you're going to do the closing entry. So I'll come back and repeat that, but each team is going to send me into Blackboard one item where they've finished those next 2 steps, closing, preparing the financial statements, and closing the accounts out. And it's going to be sent to me with the names of everybody who worked on it in Blackboard. So I want 1 entry per team. If I get any more entries than that, then I'll take off. Okay. Let me go back here for just a second. These are our journal entries, and sometimes when we said if we purchase something for cash, people still wanted to purchase it on account. So I still have that problem. We have everything in prepaid insurance now. And of course, number 5, where we bought an item and then we pay something down and sign a note for the balance. Individuals are still having problems with that. Sometimes when we're paying expenses, people want to credit expenses. Excuse me, credit expense and debit cash when we're paying expenses. So sometime I've had that problem as I've gone through. And then this final one where we're paying principal and interest. So if you got a student loan, you got to pay back what you borrowed plus interest. So they want $4,000 back. People still have had some issues making those journal entries. And so we do need to shred it up. You need to make sure you can make all of the journal entries. Let me go back to the primer for just a second. And what I did to ensure that you could make journal entries was to say, okay, there's 6 types where cash comes in. And if cash is coming in, it's debited. So if you identify 1 through 6, you got to debit cash. Then I tell you, if you had a 7 through 11, you have to credit cash. So when cash went out, you credit the cash. So if you purchase an asset, you pay a liability. If you pay an expense, you pay dividends. If you do a refund, you have to credit cash. Now, I will say that when I'm testing, I would typically do A, B, and C tests. So I just did that kind of randomly last time based on your performances. But I do expect more from the A students. And so, you're going to be challenged, and you can't just memorize. You're going to have to think as we work through so that you're at the appropriate challenge level. The key thing is for the top students, you take charge of the teams and instruct people on these things that I've mentioned. When you teach somebody something, you learn it better, and you have the understanding. So always take an opportunity to do. We had one transaction, purchase of an asset, utilize a debt. Then we had the sale on account. So we still are working with just those basic types of transactions through midterm for the most part, but we will get into some adjusting entries and eventually get through all 20 of these. But that's just, you had the 40 journal entries and you had these, and as usual, when the 40 journal entries came in, everybody could do 40 journal entries. But then when I gave you 10, tell you to do 10, same thing, there are some issues. So that always is a problem. And so in the learning process, it doesn't help people, it hurts them if you go through and you give them stuff and then they've got to come and produce something later on their own. So help them, work with them on how to do it. But there's that need to be able to go through and complete things. Okay, let's see. Okay, so this is the same journal entry study problem that we worked on and that I just mentioned, where we start off with, starting the cut with cash. We got a short-term loan from the bank. We bought supplies on account. We prepaid for insurance. We bought the auto. And notice we debit auto, credit notes payable, and credited cash. So here this is where we have more than one account. The debits have to be equal to the credits. We pay these expenses, we're crediting cash, whether it's advertising or rent. Sales, we typically did okay. When we pay the dividends, we're crediting cash. And then this final one where we pay back interest and principal, and we credit cash. So we debit notes payable, debit interest expense, and we credit cash. Once again, both sides equal. Are there any questions about any of these journal entries? Does anybody have any questions about any of these journal entries that are listed here? Oh, everybody know how to do them. Okay. We posted those to some T accounts.
Professor,
Yes.
where can I see like the past lectures? Like for example, if I want to see a lecture from last week, like could I still see it or no?
Yes, you go to YouTube and the
Okay.
lessons be in YouTube.
What's the account? What's the name?
YouTube, Joseph Boyd Accounting YouTube.
Joseph Boyd Accounting.
Mm-hmm. Go to YouTube, type that in.
Oh, I found it.
Ah, you found it.
Appreciate it.
Okay. So hopefully, you're taking advantage of that. I'm happy for the person who brought that up in terms of this being recorded. The lectures are there. And the good thing about that, you can pull up YouTube on a television or anything. And so you're able to, just see it very well as opposed to having to rely on, especially a telephone screen. So this is how the trial balance looked. And of course, you all went through a trial balance. Now, suppose I want to do an income statement. You see a red line for retained earnings. Beginning retained earnings is 0. Everything above this line is going to go on the balance sheet. You see dividends with a black line. Everything below this goes on the income statement. So this is why you have to have your accounts in order. So if you got a trial balance, you can come in here, copy our sales, paste them right there. Our sales in. Then we're going to go to our expenses, copy them, and we'll paste them right here. Then we get our dollar amounts. So we have our expenses, and if we total our expenses, how much were our total expenses? How much was total expenses? This calculator's not working today.
You just want all the expenses totaled up
39,000.
And that's all?
39,000.
39,000. So, on the right line, back goes out here. And so by total expense of 39,000, then what must our net income be? Don't all answer at once.
Are we adding them?
Wait, what did you
Sales?
ask? Are we adding them or subtracting?
What do you think you're gonna do if you're trying to get your net?
So adding them. So 289,000.
So when you look at your revenue at the end of the month and you want to see how much money you got left over, you add your expenses to your salary to see how much money you have in the bank.
But when you hold on.
You got your salary, you pay your rent, utilities,
Well,
and
don't you
everything.
like take it away then?
Yeah, you have to subtract it. Thank you.
Okay.
Yeah, that's what I thought. It'll be 211 then.
Okay.
Yeah.
Yeah, it'll be 211.
And we got the income statement done, ladies and gentlemen.
Oh wow.
Mm.
Mm.
That's not that bad.
Got an income statement done. Let's see if we can do a statement of retained earnings. Beginning retained earnings is what? 0 in this case. We're going to pick up this net income. Place it here. We're going to go get our dividends. Place it here. We're going to subtract that. And so the amount of the net income that stayed in the business was how much?
206,000.
Now you have a statement of retained earnings done. So now you can kind of see the importance of that trial balance being in order. And then it's only a couple of minutes to get your financial statements done. But you got to be able to make journal entries. And then you got to be able to come through, post them, and get that trial balance in this order. Final thing we're going to do is the balance sheet. The balance sheet is everything from retained earnings up. So cash receivable, supplies, prepaid insurance, auto, already have the titles here. So all I got to do is to come here and copy these. And we have all of the assets there. And we total those assets up. How much of the total asset for the company? How much are the total assets of this company? So we're just doing it a little simple.
$333,000.
333,000. So we're going to total these assets and we're going to get 333,000. Got to go over here and do the same thing with liabilities. So remember, we're working above the line. We have accounts and notes payable. I have the titles there, so I can just come in here, copy, so paste up here. So both liabilities are there. So the total liabilities is how much? Okay. I'm going here and get my common stock. It's 10,000. I'm gonna go up here to my ending retainer. Remember, I had 0 in here, but after the year, after I do all these transactions, I now have 206. So I'm gonna copy my ending, not my beginning, but my ending retained earnings from the statement of retained earnings, and I'm gonna put that here. I'm gonna paste it. So the total stockholders' equity should be what?
333,000.
Now I just want common stock and retained earnings now.
Okay. 216.
This is
216,000.
And now when I add the equity and the liabilities, and that's the accounting equation, assets equal liabilities plus stockholders' equity. When I add those, how much do I get?
333,000.
Okay, that's the balance sheet. All the financial statements done in 30 minutes.
Oh, that's not too bad.
That's not too bad. It's really not too bad if you got a trial balance. So does everyone see what you're supposed to be doing next week for me now, each team?
And you said that we're doing that for the for which problems? Which set of problems? I'm sorry.
There was a exercise that you all did, and I journal entry, and I had you come back and post to the ledger and do trial balance as a team. And some people presented it. You know, you would come up and do all the posting and everything. So I simply want you to go back to that problem now and prepare these financial statements. So you want to go over the problem, make sure everybody on your team can make journal entries. Then of course you're going to be on the spreadsheet. You got this already set up, and the team's going to get together and make these, create these statements. Okay. And everybody's going to participate. Everybody's going to understand it. I should be able to call on anybody on the team to present. And we got that done. So as you can see, the hard part of the job has already been done with the journal entries. T accounts procedure, trial balance procedure. So every company in the world does this. They make journal entries, they post to the ledger, they prepare trial balance, they prepare their financial statements to show how much income they had, how much they retain in the business, and what is the status of their assets, liabilities, and stockholders' equity. Every company does that every year. So now you know how to do this. Okay, see if we can look at one other thing today. Okay, the final thing that we're going to look at today, and I think I put this in course content for the accounting cycle, is journalizing and posting closing entries. And you would need to do this also on your problem, journalizing and posting closing entries. When you came back to school and you got your account, if you paid your spring bill, you didn't want to see that on your account. And so the university closes out that account and gives you a new bill. And so as we work in accounting, we have what's called permanent accounts and temporary accounts. Everything from retained earnings up is a permanent account. It carries over each year, like your grades. Your grades keep carrying over all the time. But in terms of what you owe the university, you close that out each period. So the assets and the liabilities are the permanent accounts. And then we have the temporary accounts. And these are temporary retained earnings accounts. You know, we're going to close it into retained earnings. And that's everything from dividends on down. So dividends, revenues, and expenses are temporary retained earnings accounts. We put them in those separate categories during the time frame so that we can prepare financial statements. But after we've done that, then we're going to close those accounts out into retained earnings. We have an account called income summary, which is an intermediate account for closing out. Because we don't want a lot of entries in retained earnings, we only want to see two things in retained earnings: the net income that's added and the dividends that are paid out. And so as a result, we use an income summary, and we're going to look at an example of this. There are 4 closing entries that we're going to make. First of all, we're going to debit revenue. We're going to close out the revenue by debiting revenue and crediting income summary. It has a credit balance. To close it out, we have to debit it. Our second closing entry is closing out expenses. We're going to debit income summary and we're going to credit expenses. And we close all of them out. Our third closing entry is to close the net income or loss if we have it to retained earning. So in the third closing entry, the dollar amount is always the net income or the net loss. For the second time, when we make closing entries and we make closing entry 3, the amount in closing entry 3 is always the net income or the net loss. And I'm going to say it 1/3 time. When we do closing entry 3, the amount in that closing entry is always the net income or the net loss. So it should not be any excuse why 25 students won't get this closing entry correct. And finally, we close out dividends to retained earnings. So these are the 4 closing entries, and you're going to be required to make those on your problem also. Let's see if we can look at an example. We have here a trial balance which consists of cash, receivables, supplies, equipment, accumulated depreciation, accounts payable, notes payable, common stock, retained earnings 15,000. Don't worry about the 305 yet, but the retained earnings is 15,000. And then we have dividends, sales, cost of goods sold, rent, and our totals. When we make closing entries, we have to close out everything below retained earnings. So we close out all of these accounts and summarize that amount into retained earnings. These are temporary retained earnings accounts with debits and credits. To prepare income statements, statement of retained earnings, we need the separate accounts and to prepare our tax return. But once we've done it, we got to close these accounts out so we can move to the next year's financial statement. And so we close these out in terms of retained earnings. And in this case, when we close them out, we want that retained earnings based on this information here to be 305. So let's look at a couple of other things. This is the income statement. Sales, less cost of goods sold, gross profit, less rent, net income 300,000. The statement of retained earnings at the beginning was 15,000. We're going to add the net income. We're going to subtract out the dividends. And the ending retained earnings is 305. So that's why. So beginning retained earnings 15,000, ending retained earnings 305. So that's where we're going. And this is how the balance sheet is going to look eventually. And we got these T accounts down here. And right now in retained earnings, we said the beginning retained earnings was what, 15,000, correct? We had a credit balance of 15,000. This is our temporary account here. The dividends we said were 10,000. So that's what's in these accounts before we close them out. Okay, sales, the sales were 700,000. So we've got 700 in the account now. Cost of goods sold had a debit balance of $300,000. And the rent was $100,000. Okay, so before the closing entries, these are how the accounts look. Retained earnings had a beginning balance of $15,000, dividends debit, sales credit, cost of goods sold. And so we're going to close all of these accounts using income summary to close out these accounts so that we only have 2 entries in retained earnings. So in the first closing entry, we're going to debit revenue and credit income summary for $700,000. Then with any journal entry, we post it. So for the service revenue, we're going to debit it for $700,000. And we're going to credit the income summary for $700,000. See, right now, I eliminate that. But once I do that now, the sales are closed out. Okay. So I make the journal entry that I post it to my intermediate account to close out the revenue. Next, I'm going to close out the expenses. So now I got a debit income summary. I'm going to debit income summary, and I'm going to credit cost of goods sold and rent expense. And now I got to post that. So I'm going to go to income summary, and I'm going to debit it for $400,000. And I'm going to credit cost of goods sold for $300,000. And I'm going to credit the rent expense for its $100,000. And so once I do that, I've now closed out all of these accounts. They got a zero balance. In my third journal entry, I'm going to close out the balance and income summary to retain earnings. And this amount is $300,000. So what does this $300,000 represent? Where did I get the $300,000 from?
The income?
That's the net income. So it would have come off of the income statement. So we debit income summary and credit retained earnings for $300,000. So when we do the posting now, we're going to debit income summary for $300,000. I'll just leave that here. And we're going to credit retained earnings for $300,000. You could have 1,000 accounts down here. You only want one number in retained earnings, so that's why we use this temporary account. So now this account is completely closed out. Next, we make our fourth closing entry, which is the dividends. So it has a debit balance, and so we have to credit it. So we're going to come in here and post this. And now dividends is closed out. And we're going to come in here and debit retained earnings for $10,000. So what is our balance in retained earnings now? So what's the balance in the retained earnings T account now?
Is it 305,000?
Is it 305,000?
Yeah.
And of course, you see the 305. So the 305 is going to agree with what's on the balance sheet, 305, along with what's on the statement of retained earnings, 305. And so once the closing entries are made and posted, we go from the old balance to our new balance of 305. So as you're working on your problems, you of course are going to go and post these to the T accounts and do these same strikes and come up with your closing entry. Every company in the world closes out its temporary accounts. Every company in the world prepares the income statement, statement of retained earnings, the balance sheet, but in getting to the balance sheet, it's going to make these closing entries, and that way close out everything. These are all temporary retained earnings accounts. They're all being closed out. And so once they're closed out, that balance of retained earnings is now 305,000. Are there any questions? Are there any comments?
Are we going to be able to get this document that you have up?
Well, it's in the primer, but check course content to see if it's in there now in Blackboard. Can anybody check and see if it's in there?
I'm about to check now.
Okay. So this is just something you work through. You can see why I want you to work in teams to talk it through so we can get where we need to be. So let's see. Are there any questions?
It's on there.
Oh, it's on there. So you weren't reading. You didn't read ahead of time. Just joking.
It's step 8, journal entry and closing entry, right?
Mm-hmm. Okay. Here we have a trial balance. Here we have the income statement. Here we have the statement of retained earnings. And here we have the balance sheet. And you all said all of this was easy. So now I want you to make the closing entries. I want you to make the closing entries given these facts. I want you to make me 4 closing entries. So take out a sheet of paper and begin working. Now, as I said, each team will go back to that team homework where you were turning in journal entries, trial balance, post ledger trial balance, and ledger has to be there too. And of course, you got to add in a retained earnings account and an income summary account, add those in. And each team is going to do that for me for next time. Then each individual will go back to the exam you just took. You're going to go back to the exam you just took, and you're going to do it by yourself. So we do it with the team first, that comes in on Thursday with a quiz. Then on Tuesday, excuse me, you do it individually. So you go back to the
Wait.
and you do it individually, and you have a quiz that day too.
So Thursday is a quiz.
Yes.
How much points is it worth? Because I won't be able to take the quiz. Like I can't make class. But I told you that was Monday.
Yeah, you told me that. But you're one of my A students, so you better catch it up.
All right. Okay.
Okay, so then the following Thursday, the teams come back together and they move to the 40 journal entries. And on the 40 journal entry problem, you're going to do the same thing for all 40 journal entries. You're going to prepare a correct trial balance, and I give you all a correct trial balance on the others also. Then you're going to do the income statement, statement retained earnings, and the balance sheet for the 40 journal entries. And once you do that for the 40 journal entry, that becomes year one. As we move into midterm, you're going to do year two on that problem. And when you do year two, C students will get about 12 to 15 more journal entries. The B students get about 20 more journal entries. A students get about 30 more journal entries. So somewhere in that range, 25 to 30 journal entries. And so it will no longer be the same problem for everybody. So just like I send you separate exams, you will get a separate journal entry study problem worth 20 points for the midterm, where you will have the first year. So we're going to have the first year done. So you need to get that first year done and have it in, so that when you do your balance sheet, you're going to have 2 years, the first year on the first 40, and then the second one. You can even do comparable financial statements if you want, but that's income statement. That's not critical. But you might learn something if you do both years. So does everyone see where we're moving in terms of what you're going to be expected to do?
Yes. Just one question, Dr. Boyd. So Thursday, everything is due with the group this Thursday or next Thursday?
This Thursday.
This Thursday. Okay, I was just making sure.
We have to have this finished in time for midterm.
Okay.
So we got about 2 weeks that we're looking at in terms of getting these final 2 steps down in terms of making journal entries. Making the financial statements and doing the trial balance. Some of the quizzes you have a trial balance looking like this.
Excuse me, Mr. Boyd.
Yes.
So the group project is basically going to go over those 13 problems that we did, and we started working on the T accounts and T trial trial balance.
Right. What you're supposed to turn to me in as a team.
Yes,
So
sir.
you now are doing this on it, doing the financial statements and the closing entries as a team.
Yes, sir.
One per team. So sometime on the quizzes, you'll get a trial balance like this. Then at other times, you get a listing of the accounts. I'll just list the accounts. And they may have the debit and credit amounts. And then finally, you're going to get a listing of the accounts in order, alphabetical order, and you have to create the trial balance, financial statements, and closing entries. So we will be continuously working on this. Any questions? Okay, so take your screenshots on this and everything. Whatever you need to do. I'm gonna come back to it. I just need to show you one other thing, but you should be taking screenshots for practice. All of this is good practice. So we're practicing now, and we'll look at these journal. We'll look at the closing entry. So we have the financial statements. Hopefully you can see where every number on the financial statement came from this trial balance. You should not have any trouble seeing where any number came from. Does anybody have any trouble seeing where any of these numbers came from? Okay. So now you're working on the closing entries for me. You're working on the closing entries. Pull out of this for just a second. Let me share this chart of accounts with you for a second, and this NB normal balances. So when you prepare a trial balance, these NBs tell you what the balance in those accounts should be. Assets in general should have debit balances. We do have some contra assets with credit balances, but they should have debit balances. Liabilities, credit balances. Dividends, credit balances. Retained earnings, if the company is doing well, it has a credit balance. If it's not doing well, it has a debit balance. An income summary really will zero out. Sales has a credit balance, and everything else over here typically has debit balances. So if you get down here to some miscellaneous revenue that will have credit balances also. So now you want to be paying attention to that as you look at trial balances to make sure that your accounts have the normal balances. Or if I give you just a listing of accounts, you know that, okay, I got something where I can look at the normal balances and reconstruct a trial balance with just the accounts. So you're supposed to always have this handy. Okay, so let's go back and begin to work on these closing entries. Does everybody have closing entry 1 done yet? Williams, do you have closing entry 1 done yet? That's right. Do you have closing entry 1 done yet? Is there anybody closing entry 1 done yet? Y'all might have shy today.
I'm sorry. I was doing something while you was going over there, so I'm gonna be honest. I literally don't know how to do it.
So closing entry 1, what will we debit in closing entry 1?
You do income?
The revenue, well, we debit sales.
Yeah,
So,
sales.
so we would debit sales, and the amount of that debit would be what?
250.
250,000.
Mm-hmm. And what we're going to credit? I'm just going to put IS since I'm lazy. Y'all can't be lazy. That's closing entry 1. Okay, that's all it took to do that. Everybody do closing entry 1 now.
What does I stand for?
Income summary. Do I have to write it out? That's the income summary account. Now let's see if we can do closing entry 2. So now we're going to
That's
debit.
expense account. Yeah, it's 39,000.
So we're going to debit it. Someone said 39,000. Then we'll come in here and as you can see, closing entry 2 is taken care of. And so when you have a lot of accounts, should not take you that long to get that done. Now, can I get a closing entry 3?
The retained earnings, so you got to do income summary.
So this is closing entry 2 here. So now we're ready for closing entry 3. So what we're gonna debit?
206,000.
See, you see. Now I just talked about this. I knew even if I said it 3 times.
Is it income summary?
Yes, income summary is the account, but it's the amount I'm concerned with now.
I know it's retained earnings, but did I say the wrong one?
You said the wrong amount. You said
211.
That's the wrong amount.
Oh man, which one is it?
What is it, Desiree? Yeah, get your work done today. Be here. I don't hear you. That's right. What is it? I guess she's shy today. I'm going to go to the income statement. I'm going to copy my income. And I'm going to put it here.
Oh, you ain't hear me. I said it already, but you act like you ain't hear me, so I ain't want to repeat it. I thought it was wrong.
Did anybody else hear? Okay.
No, I ain't here.
Oh,
Nobody heard you.
Well, I probably click the button to talk then.
See, you were getting your points for next time, and you didn't even see. I will give you another chance. What's that fourth closing entry going to be?
Credit.
Retained
I like
earnings.
first, please.
The what?
I like to hit a debit first.
5,000.
The debit account first. Is what I was getting had reference to.
It's gonna be retained earnings.
So we're going to debit retained earnings. What we're going to credit? What might we credit?
Dividend. We're gonna credit a dividend.
And now amount. What's our amount? I think y'all been saying that. I guess y'all ready to say anything now. 5,000. Did that. Okay, so you can work to copy and paste and do a lot of this so you don't have to copy everything down. So that's why we work with Excel, because you're adding and subtracting. So a few of you are not on the Excel spreadsheets. You need to be on these spreadsheets as you work through. Okay? Any questions? All right, well, I'm gonna let y'all set up the T accounts and post these. So what I want you to do is to set up a T account from retained earnings, put your income summary in, put all the T accounts in, post them, and when you finish your posting, your retained earnings amount should go from 0 to 206. Okay? So are we clear on what we're doing now? Are there any questions by anybody?
so we just setting up the T accounts. That's it.
Right now, yeah.
Okay.
We've done everything else. So you're just setting up these T accounts for these items, for the temporary accounts, retained earnings on down, just like we did. Okay? Then you're going to post these 4 journal entries, and posting, you should end up with this ending retained earnings balance of 206. Got it? So set them up and do it so that when you have an exam, there won't be any issue. So your quiz will consist of 2 things next time. One would be trial balance and doing financial statements and closing entries. And then those troublesome journal entries, I'll have you make 2 or 3 of those. Maybe I just do 2, do a couple at a time each time. So rather than working with a bunch of them. So probably 2 troublesome journal entries that you all I just have you just make some journal entries, so you make sure you can make journal entries. Now, eventually, you're going to have to journalize, post to the ledger, do a trial balance, and do all of these steps. That's why you can only take 2 minutes on a journal entry.